All right, so interest rates have doubled. Inventories has tripled now, all right? Market has shifted, all right? So now what? What should you do as a seller? All right, my name's Jim Fong. I'm an investor and realtor with Urban Nest Realty in Las Vegas. You know, we're gonna talk about how the market has changed so drastically and what you should do as a seller, all right? And if you find this type of information useful, be sure to like and subscribe to my channel and check out my other videos regarding real estate investing, all right? But let's get right to it. Today, we're gonna talk about what you should do as a seller because we have a lower demand, we have higher interest rates, and now you have more competition to compete with, all right? But today, I'm joined here with Wfriedman. He's a mortgage loan officer with FBC Mortgage. His contact information will be in the description below, so you can contact him for any questions. But real quick, right now, I want to ask you, Wes, what's the rate today approximately?
I'd say high fives, low sixes, depending on program.
Okay, and where were they earlier this year?
Low threes, high twos.
Okay, so nearly doubled, right?
Yes,
okay.
Quickly.
Okay, so have you seen buyers drop off or, you know, disappeared from the home search?
Overnight, I would say that. No, and usually rates will gradually change, and I think the Ukraine conflict is catapulted rates quicker than what we expected, and so yeah, overnight we've lost about 60% of the demand on buyer side transactions.
Okay, so we have 60% less buyers for you. And, you know, I'm seeing that as well, too, as a listing agent. I mean, before we just put a sign out and, I mean, we did get 10, 20 offers. Right now, we're happy to have decent showings on the first weekend. So the demand has definitely dropped, okay? I'm not seeing buyers just overbidding over list price like crazy anymore, waiving all contingencies and things like that. And, you know, savvy sellers like you watching this video also know this is happening too. With the lower demand, what I'm seeing is I'm getting calls all the time from people. I want to list the house, Jim. I want to sell my house, Jim. I got to sell this house, Jim, before the market totally switches, all right? That's the consensus I'm seeing. All the sellers are rushing to put their home on the market now. So not only are we seeing a big drop in demand, we're seeing a big influx of inventory in the market, all right? So when we talk about inventory in real estate, I mean, earlier this year, let's say if there were no new listings hitting the market each month, we would have been sold out in a matter of 3 weeks, okay? Now our inventory has increased to over 2 months now, all right? So the market has definitely shifted, all right? So it's important to know for you as a seller to work with an agent that knows how to negotiate in our current market and not just what happened last year or something like that. You need to adapt and adjust to our new current market right now. All right. So, Wes, what are the two main important things that borrowers always what's their biggest concern when getting a mortgage?
First and foremost is the out-of-pocket cost, whether that be their earnest money, their down payment, their closing costs, their inspections. That is the first question I usually get.
Okay.
Most often than not.
Yeah. I mean, we see this too. Like, I mean, first-time borrowers, you know, borrow money from their parents sometimes, right?
It's not unusual, yeah, for us to be having clients, perhaps like Jim said, borrow from parents, family member, or dip into your 401k for the cost to own a home.
That's true. Yep, the 401k, good place to get money to borrow to buy a house, though, too, right?
Certainly non-taxable.
Okay, and what's another main concern borrowers have?
Payment. Everything comes down to payment, and that's why we've seen a 60% drop in overall originations here in Clark County, because the payment shock. It's much more expensive to own a home in this market right now.
Oh yeah, most people. I mean, when they're buying a house for $500,000 or something like that, it's not like they're not thinking about the $500,000. They're thinking about the payment usually, right?
Payment and closing costs.
Okay. When working with any agents, I mean, we always try to help our sellers net the most, all right? That's what's most important to a seller. It's not about anything other than that, really. With all the new inventory on the market, we're seeing a lot of homes for sale, all right? They're sitting on the market much longer now, and we're beginning to see a lot of price reductions now, all right? People are dropping the home prices $10,000, $20,000 to try to beat out the other seller, right? But what's more important for you right now is how you work those numbers as a seller, all right? You want to net as much as possible, and that's what my job is as your agent, is to help my sellers net the most money. It doesn't have to come in a form of a price reduction, all right? That's why I want to introduce the strategy of possibly offering seller credits or concessions right now, because it really matters to a buyer. So right now, if you're a seller, you want to attract a buyer for your property. You want to stand out among your competition, right? So how do you make your home more attractive to buy than the next one, all right? So what people are doing right now, obviously they're just doing price reductions. They're dropping home prices 10, 20,000 like we said before. Or maybe they're, buying new appliances for the whole house. They're upgrading the house. They're offering flexible move-in dates and all things like that. So what we are doing is we're going to offer interest rate buy-downs to buyers. This helps reduce their monthly mortgage payment. Wes, can you tell me what an interest rate buy-down is?
Yes, and so we call this the inflation buster. What we're trying to do is reduce the monthly payment because those are the two factors. Remember, we want to know our closing costs, we want to know our upfront expenses, and we want to know what our monthly payment is. Well, with the increased rates, a buy-down is additional funds paid by buyer or seller to reduce the interest rate below the par level rate today.
How much is a rate buy-down usually?
So you can go in increments of 1%, 2%, 3%. What's most common, and prior to the change in this market, sellers would be willing to give 3% towards borrowers' closing costs.
Okay, so let's jump into some examples of how that works, all right? Let's just say we're selling your house and it's worth $500,000, all right? Let's say rather than reducing the sale price by $15,000, how does that look on an interest rate buy down, Wes?
So if a seller were to discount their price by 3%, it saves my borrower $82 a month, which isn't all that significant. Inversely, if we were to take that 3% and buy down an interest rate for the client, we're going to save them over 1% below today's prevailing rate, which is equivalent to about $303 a month.
Wow.
Over the course of the loan, that saves that client a tremendous amount of money and therefore makes it more attractive to buy your home. Let's say you have $1 million home right now and you were to offer 3% towards the borrower's closing costs. They can use that as a rate buy down, saves them a little over $350 a month. And your exposure, rather than the sales price drop, is much more affordable. And when I say that, is giving 3% towards the buyer versus trying to achieve the payment. So for instance, if you have a $300 a month savings on your payment, that seller would have to drop that price over $70,000 to achieve the same monthly payment for that client. Let's take 3%, buy down the rate, and we're still saving the $304 a month.
As a seller for you, whether you're doing a price reduction or doing home improvements or anything like that, I mean, it's the same amount of number for you. If you choose to make your home more attractive to a buyer and making, the opportunity to have a lower payment could only cost you $15,000 versus dropping the price $52,000, all right? For you as a seller, when you give credits, you don't care where it's going, but you want to make it beneficial to a buyer to select your house by making a lower payment possible for them, but we want to net you as much money as possible too. And these are just kind of strategies that you need to know about in this changing market, all right? You need to work with an agent that knows how to negotiate in our current market and not just doing tactics that were, effective last year, all right? Because we've moved past that now. The market has changed. We need to adjust what we do. And if you like this video and you found the information useful to you, be sure to like our channel and check out some of our other real estate videos. Thanks for watching.